QuickBooks Online 2026, analyzing the estimate form, both the data input and impact on the financial statements. So get ready and some coffee, because we don't just do data input. No, we get totally into it with Intuit's QuickBooks Online 2026. Searching for the free QuickBooks Online sample company file by typing into our favorite browser, QuickBooks Online Test Drive. Looking for the result that has Intuit.com in the URL, because Intuit is the owner of QuickBooks. We're then going to be selecting the United States version of the software. And of course, we have to verify that we're not a robot, Ara.
I dream in binary. Does that count?
Oh man, they're going to catch us on that one, because people don't dream in binary. Oh no, they didn't get it. They let us in anyways. All right, that's good enough. Let's go to the reports on the left-hand side. And then we're going to be opening up the major financial statement reports as we do every time. So we'll do it relatively quickly. So we're going to right-click on the balance sheet to open the link in a new tab. Right-click the P&L, the profit and loss, to open a link in the new tab. Let's tab to the right and close up any pop-ups so that we can do the date range as efficiently as possible. Pop-up. We're going to go from 010125 tab 123125 tab, and then tab to the right. Same process. We're going to go 010125 tab 123125 tab, and let's go back to the first tab then and hover over the plus button. We've been looking at the customer cycle, which ultimately we expect revenue to be coming into the company, or cash to be coming into the company for revenue earned, goods and services provided, whether on a cash-based system or an accrual system. This time, we're looking at the estimate form, which is somewhat unique, or more unique, if there's such a thing as more unique, in that it doesn't actually record a transaction. So this is one of those forms where it's going to be an internal informational type of form, remembering that most of these forms have a particular function. In other words, they record journal entries. So when we think of the forms, it's not just a data input situation. These are the things that we need in order to record the actual transactions that will be affecting at least 2 accounts per form, in such a way that the double entry accounting system remains in balance. However, this is an internal form that we need to track in the customer section, but doesn't actually record anything yet. Let's analyze why that would be by first going to our flowchart. This is the desktop flowchart. We're just looking at it to look at the flow of the forms, which is the same for any kind of accounting system. We're looking at the customer cycle, remembering the easiest cycle would be something like gig work. So you work at YouTube or something, or you work for you make videos and then they pay you. Then you just record the deposit. Estimate form not going to be needed typically in that situation. You might be at a cash register, in which case you're usually not going to be using an estimate form. However, you can kind of imagine a situation where someone calls in and they say, hey, look, I want to come in and buy this guitar or whatever it is that you sell over there. And you go, okay, this is how much it costs. In order to give them the sales price, including tax, you might make an estimate, right? You might make an estimate in order to punch that up, and you might make the estimate to help you determine that you want to put that particular guitar or whatever it is on hold, so that they can come in and pick it up at some future point, at which point you will most likely then make an invoice, because the estimate ties to the invoice, and then receive the payment. But more likely, when would the estimate be used? It would be used when you're going to have projects that will be dealt with. Most people think of construction projects when they think of accounting for projects, and that would certainly be the case, in which case estimates are going to be really an art form in and of themselves if you're talking about long projects, which is often the case with construction. If you're building a building or something like that, or even just a deck, something that's going to take some time to build, then the estimate is something that takes a lot of work to try to figure out whether or not it's going to be close or not to that end point. Whereas in other cases, the estimate might just be a holding type of form, such as with the guitar. We're going to hold the guitar on hold, and therefore I'm going to enter the estimate to kind of calculate how much it will be, so I can tell the customer, which includes something like sales tax. But we also could have estimates in service businesses. That would include law firms, CPA firms, landscaping. Now, these estimates might be billed out on hours, meaning you might say it'll take approximately this amount of hours. But more likely, it would be nice to try to make the estimate based on the services that will be needed, so that you can tell them what you're doing, what's the static charge for what you are doing, and then you can enter the estimate to give them an idea. And then the question is, once you've got the estimate in, then you're going to convert that at some point to an invoice, possibly when the job is done. Or if it's a long project, you might have process invoicing because you might be billing them to some degree as the work is being done. That's going to be a different kind of system because most businesses, they do the work at one point in time. If it takes you a year or longer, or like a long period of time to do the work, then you might have to do a percentage of completion, a different revenue recognition principle. That's a specialty in and of itself. We have other courses and sections to get into that if you want to talk about that in more detail. But there's also the question of, when I make the invoice, is our agreement saying that whatever happens in reality, I'm going to take the estimate that we agreed on to make the invoice and charge you that? Or is there leeway? Is your estimate just an estimate that you can then adjust based on the actual costs that went into the job? And in that case, then the invoice could change. Either way, your goal in a free market system is to try to make the estimate as close as possible, because that's going to build up your reputation and build confidence and trust. However, if you're working for the government, then there's a lot more manipulation that could be involved, and there's also low bidding, underballing the estimate, and then by the time the government figures it out, it's already too late, and you're like, whatever. So there's a lot of kind of gamesmanship that goes there. But you would think in the private sector, you want to build your reputation, making the estimate as close as possible, so that you make customers happy. So let's go back on over, right, Ara?
Yeah, take us back to where we left off.
Okay, let's go to the estimate form, and imagine that we're gonna enter an estimate. So let's close this back out, and let's do the easiest kind of estimate situation, where basically someone calls in and they're just going to reserve a piece of inventory or something like that, and you're going in and you're at the cash register saying, look, I would like to tell you how much it would cost, including the sales tax, which you could just pull the calculator out and kind of figure out, but there might be some complication because you might have some items that are subject to sales tax, some that aren't. They might be looking for both goods and services and whatnot. So you could pull up an invoice and type that information in, but it would be nicer possibly to do it with an estimate, because then that's not going to record anything into the system. And again, you could use it as a reserve process if they want to come in and buy it. So we could say customer number 1, and we'll just add a new customer. So this customer calls in. We would want their contact information in practice if we're going to save anything for them, but we're just going to go through it for now. 1231 and then let's make a new item. Let's make an inventory item. And so I'll say inventory 1. I'm going to make a new item. And this one's going to be an inventory item. I'm going to copy inventory 1. I'm going to put 10 on hand just so we have some on hand so that we can then buy. That'll make a journal entry. Reorder point will be 0. Inventory account will be the asset account. Description inventory, let's say they cost a good old $100 again. And income account, sales tax will be applicable. The cost, let's say the cost is $25. So we make $75 upon each sale. Revenue minus expense, sales minus cost of goods sold. Let's save it and close it. And so let's say they want one of those. We've got 10 on hand. We sell one of those. Let's also say that we have a service item. And we'll just say it's service 1. And let's say,
let's have a new.
Say that. Ara, your voice is messed up.
Sorry about that. Must be the studio's acoustics.
You're scaring me, Ara. You're scaring me. Stop that. Okay, so we're going to say this is going to be service And then let's say this one has no tax involved, no tax, non-taxable, and go boom, and okay. So that's going to be service revenue. So then, so you can imagine a fairly complex invoice that would take place, and then you can calculate the tax on it. I'm going to save it so it'll then calculate the tax. So there it is. So it only tax was applied to the $100 at the, and so that's going to give us the $8. Not sure it totally should be. I would think at 8% it would be $8. Okay, whatever. I'm gonna let that go now. We'll talk more about the sales tax later. But this is an estimate. It looks like an invoice, so you would think it would record something, but it doesn't. This is just going to be simply an internal type of form, and this will allow us to track the estimate. It'll allow us to give the total amount if we calculate the tax correctly, including the sales tax, and so that we can advise somebody. And then we could say it's going to be basically an open invoice at this time. Let's save it and close it. Save and close and see K Pasos over here. We're going to say it's in the apps. We're going to go into, we can go into the sales side of things. And let's see if I see the drop down this way. We've got the sales transactions. So we could go into the sales transactions, one place to find it, and then close this out. And then we could then say we want to look at the estimates in the drop down, remembering this area shows in essence basically all the forms for the most part under the customer cycle. So we can filter by the estimate form, and then last 12 months gives us the date range that we want to be seen covered. And then we have all status. So we could have, these are the statuses of the estimate: pending, accepted, open, closed. So what happens with the estimate? We would expect, we enter the estimate, and then they either accept it or they don't accept the estimate. So if they accept the estimate, then you basically have an open estimate. So you could go through the pending, accepted, but basically we're going to say the estimate is open, is the main category. And then once the job is completed, you would expect that you would close the estimate and convert it. So it would be closed or converted, because that would mean that you made the estimate into the invoice, and the invoice is the thing that's actually going to record something at that time. So if I say it was open, here's the customer, here's the open estimate that we set up. Let's open the ham boogie again, and then I can go down to the customer hub where I have a whole nother estimates category down here in and of itself. Let's open that one up. So this, if we deal with estimates a lot, would probably be the place that we would go to sort our estimates, because it gives us a whole item just for estimates. Once again, we have all, or we have the closed and converted on the estimates, and we've got the date range here. So we can also find them in the customers. So if let's open the ham boogie and do it this way. So we go into the customers, and I could go up and close this one out. And we see up top, here's a filter by estimates. So we have this one customer with an estimate. We can go in there. Now, if the customer comes in and they're like, okay, now I want to complete the order that I have made. If the order is the exact same as the estimate, then we could go in here and basically make the form from the estimate. So if I hit the drop down, we have the convert to invoice. And so then we have the customer. Let's go close this out. Let's close this out. Boom. So now it made the customer, and everything looks good. It pulled over the products and whatnot. We have the same items clicked off. This time it properly calculated the tax at $8. So something weird was happening with the estimate when we did the calculation. I think that's because it's the sample company. So I think I think it'll work fine because the tax gets messed up, because usually it happens real time. So when you do it in this sample company file, I think it gets a little ugly. When we get to the second half of the course, we'll set up our own sales tax as a practice session, and we'll check that out in more detail. But now we're going to record the invoice. So the invoice pulls over. The estimate should now be marked as closed at this point in time. What's the invoice going to do? What normal invoices do, increasing the accounts receivable by 133. The other side going to revenue, but only for the 125, going to two separate revenue accounts. The first one going to inventory or product income. The second going to services. And then we have the $8 difference going to the sales tax. So let's go ahead and save and close that. Save and close. And then we can see the links in here, right? So now we have the invoice. The invoice is due, so we need to collect payment on the invoice. And we have internally the estimate has now been converted, which in essence means it's closed, right? So if I click on it, you see the detail connecting to the invoice here. If I edit it, then we can also see within the form the estimate up top. Trying to see where well, in any case, we have that. Let's close this out. Let's check out where it got posted, the invoice, just to practice our invoice, because the estimate didn't record anything. But when I recorded the invoice, accounts receivable should be going up by the estimate. So accounts receivable is going up, not by the estimate, by the invoice. There it is, 133. The other side is going to the P to the L, the profit to the loss. That's going to be under the income of sale of product here. And we also have the 100 here going back. And then we also have the service item. So we have the service item that we sold, and how much was that one? The 25. And then the difference is going to the sales tax, back to the balance sheet, and that would be to the sales tax board of equalization. Also, we have the impact on the subledger for the accounts receivable and the subledger for the inventory, which would be going down. Let's go back to the first tab and look at the other places where we can track the estimate. So if I go back into this one, the sales, and we look at the sales transactions. And so if I look at the estimates now, the ones that are open are gone. So now we have the ones that have been converted. So there's the one that has been converted. If I look at closed, we see, is it also enclosed or just the converted? So there's a difference between closed and converted. So this one has been converted. And so there we have it. We can also see it in opening the ham boogie. Estimates down here. And same idea, pretty much same layout, but just estimates in this window where we can say that it was converted. Bam. Okay. Now, just to note that the estimates might within a job cost system be linked to longer projects, which could be in a service company like a law firm, or could be in a construction company that might be doing longer construction type projects, in which case it's going to take a lot longer to kind of think about how to make the estimate to make it as close to the actual cost as possible. And you might be using something like projects within the system so that you could track your projects. So if you're in that system, again, we have a whole nother course or section that gets into that kind of specialty area, but you would expect that you would make an estimate for a particular project. Then the project would basically be opening and you'd be tracking the income and expenses that are assigned to a particular project over an extended period of time would be the general idea there. Okay, so we'll talk more about projects in a future presentation. One way you can find the projects is to search up top for just projects. Yep. And so did I not spell it right? I don't think I spelled it right here. Hold on a second. Here it is in the drop down. So we have projects here. So run your projects with confidence. So it says make better decisions by knowing how your jobs are doing. So this would be in the old system, it used to be called jobs that we would be setting up. And now you still have jobs, which are called sub-customers in the new system. But basically, oftentimes you would be using projects having certain things that link better, which might include like integration with the payroll and with tracking things like miles driven and that kind of stuff. So we'll touch on that a little bit later, but again, we have a whole nother course or section on that. Let's enter one more estimate over here. So if I enter another estimate and we imagine that we have some kind of job cost system, let's say it's customer 3 this time, and I'm going to say save it. And so now I'm going to tab through this thing, and we're a landscaper in this sample company. So if I was a landscaper, the job could get quite complex, right? I might be saying, okay, let me hit the drop down and let me tell you how much it's going to cost in order to basically get this job done. I'm just going to estimate here, assuming though that when I actually make the invoice, I'm going to base it on the actual costs, which I'm going to track through the job costs. So this might be close, but your actual bill might vary from this. Similarly with a law firm, similarly with a bookkeeping firm, noting that law firms and bookkeeping firms are often set up as partnerships, so they're billing out the time of the staff. So oftentimes the invoice might just look like billed time for particular projects or jobs. However, if you could group your information in such a way that you don't have that, more and more people prefer oftentimes, I believe, to have a fixed rate by project, no matter which of the staff are basically working on it, right? So if you're a bookkeeper, for example, you might say, this is how much we're charging per form for taxes. This is how much we're charging per transaction or per category of transaction, meaning if 1 to 20 accounts are impacted, this is the rate. If more than that are impacted, this is the rate, and so on and so forth, instead of just an hourly rate that's billed out by the staff or based on the staff's time. But sometimes you can't do anything other than just staff time because the projects are all unique in nature. Therefore, you're basically stuck with, I'm just going to have whatever it takes I'm going to do, and I'm going to charge you a rate for that. But in landscaping, we could say, okay, we're going to design the thing, 75, and then we're going to say, okay, then what's going to take next? Concrete. Concrete is taxable. We're going to have to buy the concrete. Let's say we have 20, quantity of concrete that it's going to cost $25 each, let's say. So it's going to be $500 of concrete. Now, when I actually buy the concrete, it might change. The price might be different than my estimate because time changes. So the rate might be different at Home Depot or whatever it is from the time I make the estimate. When I bill people, I'm going to pull that billable information into the project, tracking it there, pulling it into the ultimate invoice. So I'm going to be saying, look, my estimate here is just an estimate. I'm going to bill you based on actual cost plus my markup, whatever my markup is. I'm going to be trying to be as transparent as possible so that I get the estimate as close as possible. And I tell you the actual outcomes, why they differ from the estimate, and possibly just exactly what my markup is as well. So you can see, so it's totally transparent is the way I would recommend doing things. But you could pump, we're going to have a pump. So let's say we have a pump in there that we need for a fountain. And then let's say that we have a rock fountain that we're putting in there, right, in the job. And then we're going to say that we have lighting. Okay, we need lighting in there. And the lightings, let's say there's like 5 of those and so on. And then we've got the services. Now you can see that some of this is taxable and some of it isn't. That's based on the items that we set up, which we'll talk about how to set up items later. But you can see that in a project cost system, particularly in a construction system, that your estimate can get quite complex. So then you're going to go down here and say, okay, let me calculate save it. So it'll calculate the sales tax on it. And so there we have it. So now we've got total charges that we have, 885, and then you've got the sales tax on it as well. Now you might have another line item to give you your markup, for example, whatever the markup might be, because you might be putting these line items in, say, at cost, or you might add the markup to each of the line items. But either way you do it. And then you have the total amount, $955.80. So once again, if I save that, if we save and close that, then I might give that to the client, right? And the client is going to say, okay, do I do I want to go forward with this project or not? Is that in my budget or not? And so they might reject it. And if they reject it, then we could just say that it was not accepted. The project was not accepted, so that we no longer have it as an open project. So I can then go into my customer hub, customers down here, closing up the ham boogie, and we're going to open up the estimates. So I'll filter it by the estimates. Now we've got customer number 3. I unfiltered it. Filter by the estimate, and it's thinking we should have an estimate in customer number 3, I thought. So yeah, here we have the estimate. So it's pending at this point in time. So then I could say, all right, let's actually look at it in the customers hub over here in the estimate section. And then I'm going to go up and close the ham boogie. And we can then say, okay, this is a pending one, right? So it's pending in the category of pending. And then I have in my dropdown, I can convert to an invoice, or I can mark as accepted in the dropdown. So the next step you would think would that it would be accepted. So we could have that extra step. So we're going to say, okay, it's been accepted, mark as accepted. If I hit the status, we have pending, accepted, and declined. Now, if it wasn't accepted and I want to get it out of the pending status, then of course we could decline it, and that would move it away. And that might happen all the time, because we might be making estimates and saying, this is what we think it's going to cost, and do you want to do it or not? And if they don't, they'll decline it. That's fine. And then we just want to get it out of this category, so it'll be declined. But now we're going to move it to accepted. Okay. And so now if I hit the drop down, now it's in the accepted category. There we have the accepted category. Now we could convert it to an invoice once the job is done, right? So if I convert it to the invoice, that would be great, except this was a very detailed job. So it might be the case where the estimate doesn't line up exactly to the actual billing, because I might be pulling stuff in from the actual billable items. So in other words, I'm going to close this back out. When I process work, for example, and I hit the plus button and I make an expense form, then I might be making an expense for something that I want to pull over to a billable item. So for example, if this was customer 3, if I was paying for whatever, the telephone or whatever, and then I'm going to put it down here to the category of services, let's say auto of some kind, auto, gas, let's say.
And now when you save,
I want to pull in whatever, and let's say this was going to a particular job, so I'm going to make it billable, and then I'm going to pull it into customer number 3. This is what's going to help us to take that information, record the expense, but also pull it into the invoice. That would also, if I had a project cost system, pull it into the project instead of to a particular customer. So then if I save and close that, that's going to help me track the information to make the invoice. So in other words, I might not be making the invoice from the estimate. So that just means that now the funny thing here is that I would like to move it from accepted to closed. But the only way I can really do that within QuickBooks at this point in time is to convert it to an invoice, because that's going to be the triggering factor to make that automatic move. In other words, if I go into the accepted status here, we hit the drop down or rise up, it's going to be update the status, and it only gives me the status of pending, accepted, or declined. And what I want to do is move it to closed. Now, but I might not want to do that by converting it to an invoice, because again, I might want to make the invoice from the actual billable items. So the workaround would be that when I pull in the billable items, I make sure to use the converted invoice here, and then within the converted invoice, I make the adjustments that need to happen. So I would possibly remove these items and pull in the actual items from the billable items. That's one thing we can do. Or we can make the invoice separate and compare it to the estimate so that we don't, and then make another invoice to basically just zero out the invoice. So you'd have to basically go into the invoice, mark it as 0 so that you can just make the conversion happen. So in other words, if I made all this 0, or basically it might force me to record $1 to record the transaction. Boom, 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 boom. And so then I'm going to say, just to make the conversion, which is kind of annoying, I could say we're going to save and close that. Save and close that. Now it's been moved from accepted to converted. So now we have it from accepted to converted. If I go in here and I hit the drop down, we have so now we can go, now that will give us a 0 amount invoice in it. And then again, we could go in and void the invoice and see if it keeps the status. So this is the workaround that I'm seeing right now. So then I'm gonna go back on over here, and we're gonna go into the let's go into the customers, and I'm gonna scroll up and then close this one. Customer number 3. Let's go into customer number 3. And let's take a look at that invoice. So the invoice has 0 in it, so it's already marked as paid. So because the invoice is a 0 amount, it'll basically show as paid. It's a little bit annoying in the customer section because you're going to have this invoice that has basically a 0 amount in it, but that will make the conversion or move the status from accepted to converted.